According to data from the U.S. Bureau of Labor Statistics, housing is typically the biggest expense that most of us have. For many families, that could be $1,000 or more every month for the next 30 years. That is a lot of money, and that is a very long time. But imagine what your life would be like if you no longer had a mortgage payment. I mean, would you be able to use that extra money to pay off your other debts, retire early, or simply enjoy yourself in so many other ways? In this video, I'm going to cover some techniques you can implement that can help you pay off your mortgage much faster. Before we get into the rest of the video, if you're enjoying the content so far, help me out and tap the like button. And if you're new here, welcome to the channel. We cover finance and real estate topics. Consider subscribing and turning on the notification bell for more videos like this. And if you're a returning subscriber, thank you all for your continued support. I really appreciate each and every one of my Joe-It-Alls. Alright, so my first piece of advice is to refinance your loan. I mean, when was the last time you refinanced your mortgage? A year ago? 5 years ago? Never. So I would encourage you to take a look at the most recent interest rates. If the interest rates are 1% or more lower than what you're paying now, then it might be time to seriously consider refinancing. I mean, we are currently enjoying record low interest rates, and now may be a great time to take advantage of it. You can use sites such as bankrate.com or LendingTree to shop and compare mortgage rates, and it's always a great idea to check with your current lender. They may be willing to offer you special incentives to keep your business. Refinancing may also be a great move if you have a variable rate loan, as fixed rates are so low right now. Now, typically fixed rates are usually the best because you'll never be surprised how much money you owe every month. Don't forget, refinancing can also be a great time to think about switching things up for maybe a 30-year to a 15-year term. Now, generally with a 15-year mortgage, you not only pay your loan off faster, but you'll end up saving tens or even hundreds of thousands of dollars in interest over the life of the loan. My next piece of advice, and one of my favorites, is to pay extra on the mortgage principal every month. So there is no easier way to pay off your mortgage quickly than to simply send in more money every month on top of your regular mortgage payment. Every little bit helps, trust me, I know. So if you're able to send in an extra $100 a month, it's estimated that you can knock off as much as 5 years on a 30-year mortgage. I've been doing this myself the last several years, and I've seen principal balance drop a ton. Honestly, it's an exciting feeling seeing that mortgage balance drop and drop every month and see more of your overall payment attacking the principal rather than the interest. For myself, Joe-It-Alls, I make it a priority to send in an extra $100, and some months I aim to send an additional $150 to $200. Now, this technique is even more effective in the beginning of your loan, as typically the first 5 years of mortgage payments, the majority of your payment is going to pay interest without barely touching the principal. But like I said earlier, guys, everything helps. Even if it's an extra $25 or $50, all of that adds up over time. Just make sure you contact your lender and verify that they're applying these additional payments towards your principal on your mortgage statement. So if you check your statement, it should say additional principal payment. Now, this is very important, guys, because sometimes they'll allocate the additional money towards something else. Another great option is to switch to bi-weekly payment. So does coming up with an extra $50 or $100 per month to send in with your mortgage payment sound like a struggle? If that's the case, I get it. Sometimes money's tight. So here's another strategy to consider. Many mortgage lenders will allow you to switch to bi-weekly payment. So instead of paying your loan once a month, you pay it every 2 weeks. Now here's the trick, guys. Since there's 52 weeks in a year, that would work out to 26 payments, which is the same thing as 13 monthly payments. So this is just a really creative way to make one extra mortgage payment per year. And the good news is that by using this technique, you could shave 4 to 6 years off a typical 30-year loan and 1 to 3 years off a 15-year loan. Now, if you're getting a bonus, tax refund, or any other decent chunk of money and you don't know what to do with it, applying a lump sum towards your mortgage principal would be a very smart move. So just like with the extra monthly principal payments, a one-time lump sum payment can significantly erase years of payments and thousands of dollars in interest off your mortgage timeline. It is generally recommended that you pay off high-interest, non-related mortgage debts such as credit cards, personal loans, car loans, or any other debt that's not making you money. So if you already have an emergency savings fund of 3 to 6 months of expenses, you're already investing and have your debt under control, I would say you can reallocate money that was going towards credit cards, loans, and other bad debt and attach attack your mortgage principal. Now, this is known as the debt snowball method. If you want more information on this technique, I have a video that goes into more detail, but this is where you pay off your loans with the smallest balance first, not the ones with the smallest interest rates, and then apply that money in your budget to your debt with the second smallest balance. Every time you repeat this cycle, it means more and more money will go towards the next smallest debt, like a snowball. For most people, since your mortgage is likely to be your biggest debt, you can build up a ton of extra money in your budget to put towards it if you can stay disciplined. It does not matter if your goal is to retire early, eliminate years of interest, free up time, free up some cash flow, or just not have to owe the bank anymore. Start working on as many of these tricks as you can to handle paying down your principal mortgage. So there you guys have it, some techniques to help you pay off your mortgage as quickly as possible. If you found value in the video, please be sure to tap that like button. It goes a very long way in helping to support and grow the channel. And also go ahead and share this video on social media. It helps me out a ton. Don't forget to subscribe and turn on the notification bell as I'm posting valuable new content every week. Thanks again for watching, and until next time.